Understanding the Danish tax card is essential for anyone living and working in Denmark. Whether you are a Danish citizen starting your first job, an international professional relocating for work, or a student taking on part-time employment. In this video, we will walk through what the Danish tax card is, how it works, and why it is so important to your financial well-being and compliance with Danish tax law. We will keep the explanation practical and focused, so you can leave with a clear sense of what you need to do and what to pay attention to. At its core, the Danish tax card, or skattekort, is the tool that determines how much tax your employer withholds from your salary before you are paid. Denmark operates a system of withholding tax, meaning you generally do not pay income tax directly yourself on a monthly basis. Instead, your employer or other payer, such as a pension provider or student grant authority, uses your tax card to calculate and deduct the right amount of tax at source. This system is designed to make paying taxes seamless and predictable, and to reduce the risk of large, unexpected tax bills at the end of the year. The tax card itself is not something you usually see in physical form. It is a digital record maintained by the Danish tax agency, skattekort, and it contains key information about your expected income, your personal tax allowance, and the tax percentages that apply to you. When you start a new job, your employer retrieves your tax card details directly from skattekort, which allows them to apply the correct withholding from your very first paycheck. In practice, there are two main components on your tax card that matter for most people: your tax allowance, known as the personal allowance or personfradrag, and your withholding percentage. The personal allowance is the amount of income you can earn each year before you start paying income tax. This allowance is spread evenly across the year, typically over 12 months, which means a portion of your income each month is effectively tax-free. The withholding percentage is then applied to the income above that monthly allowance. Together, these elements ensure that the total tax you pay over the year is as close as possible to your final tax liability. There are also different types of tax cards. The most common is the primary tax card, which your main employer uses. In addition, there is a secondary tax card, used when you have more than one source of income, such as a second job, a side business, or certain benefits. The primary card includes your personal allowance, while the secondary card usually does not, meaning income on the secondary card is often taxed at a higher rate from the first krone. Allocating the right card to the right income source is crucial because it directly affects how much tax you pay during the year. For example, if you accidentally assign your primary tax card to a small side job while your main salary is paid on your secondary card, your main income may be taxed too heavily every month, and the smaller job may be undertaxed. While this might balance out at year-end, it can create avoidable cash flow challenges and unnecessary administrative follow-up. Understanding how your tax card is created and maintained is equally important. Each year, skattekort prepares a preliminary income assessment, known as forskudsopgørelse, based on information about your income, deductions, and personal situation. This assessment drives the content of your tax card for the coming year. If your situation changes, for instance, if you receive a salary increase, change jobs, move from part-time to full-time work, take out a mortgage, or relocate in or out of Denmark, you should update your preliminary assessment online. When you do this, your tax card is automatically adjusted, and employers can access the updated details. Keeping these data current is one of the most effective ways to avoid surprises. If your income turns out significantly higher than what is reflected on your tax card, you may pay too little tax during the year, resulting in a residual tax bill after the final assessment. Conversely, if your income is lower than anticipated and you do not update your information, you may pay too much tax each month and only receive the refund after year-end. From a financial planning perspective, maintaining an accurate tax card is therefore a practical way to manage monthly cash flow and to avoid unnecessary stress when the annual tax statement, or årsopgørelse, is issued. For newcomers to Denmark, registering for a tax card is one of the first administrative steps if you plan to work. After you obtain your civil registration number, the CPR number, you can apply for a tax card through skattekort. Without a valid tax card, your employer is required to withhold tax at a relatively high standard rate, often referred to as the B card rate, which can be significantly more than you would normally pay. While this excess is usually refundable once your correct tax situation is clarified, it can generate substantial short-term cash flow constraints. That is why it is important to apply for your tax card as early as possible before you start work, or as soon as your employment is confirmed. The tax card also plays an important role for students and part-time workers. Even if you only work a few hours a week, the employer still relies on your tax card to know how much tax to withhold. If you work for multiple employers, for example, a student job and a weekend shift elsewhere, you must assign your primary card to one of them and ensure the others use your secondary card. Many students overlook this step, leading to inconsistent tax withholding and unexpected outcomes at year-end. Taking a few minutes to log into the online tax portal and verify that the right employer is using the primary card can prevent many of these issues. Beyond income from employment, the tax card can be relevant for various types of payments, including unemployment benefits, certain pensions, and public stipends. Whenever you start receiving a new type of recurring income, it is advisable to check how your tax card is being used. In some cases, you may want that income paid on your primary card. In others, it may be more appropriate to use the secondary card. While the system is designed to be largely automatic, ultimately you are responsible for ensuring the information driving your tax card is correct. This responsibility is central to compliance in the Danish tax system. Denmark places a high degree of trust in taxpayers, combined with strong digital infrastructure. The tax card is a concrete expression of this model. It simplifies day-to-day administration, but it also assumes that individuals will monitor their information, report changes in income, and review both the preliminary and final assessments. From a broader perspective, the tax card contributes to stability and predictability in public finances. Because taxes are withheld throughout the year based on reasonably accurate data, the government can rely on a consistent stream of revenue to fund public services, from healthcare and education to infrastructure and social welfare. For you as an individual, the same predictability applies. You can plan your budget knowing that your salary, after tax, is broadly aligned with your final tax position. To manage your tax card effectively, there are a few practical actions worth building into your routine. First, review your preliminary assessment at least once a year, and always after major life events such as a new job, a change in working hours, marriage or divorce, or a significant loan or property purchase. Second, verify which employer is using your primary and secondary tax cards if you have multiple sources of income. Third, keep copies of key documentation, such as employment contracts and loan agreements, to support any updates you need to make. And finally, use the online tools from skattekort, which are designed to guide you through the process step by step. In summary, the Danish tax card is far more than a technical formality. It is the mechanism that connects your personal financial situation with the broader tax system, ensuring that the right amount of tax is collected at the right time. By understanding its purpose, being aware of how it is used by employers and other payers, and proactively keeping your information up to date, you can avoid unpleasant surprises, enhance your financial planning, and contribute to a well-functioning system that underpins many of the services and benefits that define life in Denmark.